What's up, everybody? This is Chen with Trader to Be, and today I'd like to talk about trading correlations in the markets. So, understanding correlations in the market is imperative to any trader that's trading in the equities market today. When you understand correlations, they help you to determine the relationship between indexes and individual stocks. They also help you to understand the relationship between stocks and other stocks within the same sector. These relationships can either be positive or negative in terms of their movement. And the beta within these relationship is just a terminology that represents how volatile a stock is in relations to the overall market. Any stock with a positive beta will tend to move in the same direction as the market, but with more volatility. Anything that has a negative beta within the markets will move in the opposite direction of the market, but again with more volatility based upon how big or small their beta is in relations to the overall market. In the equities market, there is an inherent relationship between all the major indexes. Because most major stocks are small components of the indexes, the direction that these major indexes trade will have a huge impact on individual stocks. So an example of that here is in the S&P 500 and the Nasdaq, otherwise known as the SPY and the QQQ. As we can see here, when the market gaps lower from the previous trading day, you can see all the indexes are gapping lower. As they move up and down during the day, you can see a very similar pattern taking place within all the major indexes. And using this information here can help you understand how to position yourselves to trade individual stocks within the markets. Indexes and stocks. The broader indexes will cause ebbs and flows in the price actions of stocks from an intraday perspective. Using this information can help you make better trading decisions. And we'll take a look at an example of that right here when we analyze the SPY and the QQQ in relations to how Facebook and Apple shares are traded during the day. So the first thing to note here is that there was a large gap from the previous trading day. As the broader indexes gap down, that causes the stocks to trade lower during the day. Now, as we move forward into the early trading day, we can see that as the broader indexes begin to consolidate and rebound, so too does Facebook and Apple shares. So as we can see here, the S&P finds footing, so as Nasdaq, they begin to find footing and buyers come in, starts buying it up. This causes Facebook to establish a low on the day, and then the prices start to trade higher, as well as Apple. As we move later on, just after 10 a.m. early into the trading day, we can begin to see that the broader indexes have recovered a bit of their move, but they've topped out and begin to sell off. And as such, that top out and that sell off causes the markets to go with it. In this particular case, we can see Facebook shares form some type of a bear flag right here. And as the broader indexes pull back, that causes this breakout here to take place in Facebook shares, as well as with Apple shares. As the broader market begins to pull back, Apple shares begin to top out and they start to pull back with the markets as well. And one final chart we can take a look at to analyze here within the markets. As we can see, as the markets begin to establish footing again and buyers come back in, pushing the indexes back up, we can see that Facebook and Apple shares also begin to bottom out and start catching bids too. So this is very valuable information that you can use to help you ascertain what's going on in terms of price action in the markets. It's important to understand establish key levels within the markets and use these key levels as pivotal points to position yourself to trade the stock that you want to trade. So, in conclusion, intraday trading and correlations are a very important tool that you can use to help give yourself an edge when it comes to trading. Knowing this information can be used to help you set better trade setups during an intraday trading period. When the indexes are entering key price levels, it makes for areas of interest in particular stocks. A breakout or a rejection from these levels will likely cause individual stocks to move with it. So it was important to take note of key levels within the broader indexes. And if you guys are interested, you can find out more information at www.tradertobe.com. They also have a very comprehensive live education program in which all this information is taught to individual traders. So hope to talk to you guys soon. Have a good one. Bye.